So today we're talking about we're just doing introduction to forex trading. We're not going to market structure yet or any other deep details. Today will just be about the introduction. So you just know the basic things about trading first. So I don't know.
Okay.
You said you made your own research. Like, have you made your own research about forex trading before?
Hmm?
Have you made your own research about forex trading before?
Somehow, yeah. Yes.
So
Yeah.
what do you
At
understand?
least to share.
What do you
Oh.
understand about forex trading? Like, what's forex trading?
Um, it's like where you trade, like say, futures. No. You trade a lot of things. Like, okay, maybe gold or the prices of cryptocurrencies
Okay,
or
let me just give you
futures.
the main definition of forex trading is just is a market where we trade currencies, and sometimes we add commodities and crypto trading, future trading, but most of the trading they are actually different. But the main thing about forex trading is just trading currencies, and it's actually currency conversion, comparing one currency to
Okay.
another. The conversion rate. So that's just simple definition of forex trading. And the common knowledge is that about $7 trillion exchanged every day on the forex market. The main people who trade forex trading is the banks, institution, retailers. Retail traders are like me and you. We are retail traders and government. They trade forex because forex is currency conversion. So they are the main people that actually move the market. Then the forex market is forex market currency market is not open 24 hours. I think it's open like maybe 20 hours a day, but it's from Monday to Friday. The crypto market is open 24 hours. I don't know about futures market. I don't trade futures market, and there are others that are open 24 hours, but forex market is not open 24 hours. And the next thing is there is high volatility. There is high liquidity. Liquidity is the money. So when I say there is high liquidity, there's high money flow in the market. That one is for sure. And we'll be using candlesticks to analyze use an candlestick to analyze and view the market. These candlesticks present money flow, liquidity. That's the basic stuff. In case you have any question, you can also ask me. So I'll not be saying something in this video, just basic stuff. I'll save the video. You can go and watch it later. But you have
Okay.
question, you ask me. Then
Okay.
we have
Okay.
currency pairs, which is the main thing we trade. We also trade commodities. I don't trade crypto for now. I stopped trading crypto, but the most important stuff is currency pairs. Commodities is not the only commodity that people like trading very well is I know of is gold, oil, Nasdaq. That's the commodity. I don't even think Nasdaq is a commodity, but that's the commodity that people like trading. Mostly gold. But talking about currency pair, we have major pairs and minor pairs. Major pairs are the pairs that they have high volumes. They have high volumes of trades on it, so the market moves faster and the rest like USDJPY. Mostly USD pairs are major pairs. If you look at this chart, in this chart, this is the 1 hour view. In this chart, each candle takes 1 hour to form, and you can see that price is still trending from here to here. It's probably like 3 or 2 days, and price is trending. But on a minor pair, 5 days could just be. Let me get this. On a minor pair, 5 days could just be from here to here. So the market will chop. So there's no much volumes on it. I only trade major pairs. Major pairs I trade is USD JPY, GBP JPY. I trade gold, GBP USD, and Euro USD. They have other minor pairs like CAD JPY. CAD itself is CAD is a major pair. Let me see if I can see Euro NZD chart.
Okay.
NZJPY.
Okay.
JPY pairs are also major pairs. So, something like this now, you don't be seeing the market like being choppy somehow. From here to here could be
Mm-hmm.
10 days or so from here to here. There's no much volumes in all these pairs. That's why many people like trading the major pairs.
Okay.
And hold on. Then we have in explaining currency pairs, we have quote the base currency and the quote currency. I mean
The what?
the base currency and the quote currency. The base
Base and quotes.
and the quote, yes. This one is not like it's not really important knowledge, but it's just important to know it. For example,
Okay.
this chart is USD JPY. The USD is the base currency. The first currency in the comparison, the first currency is the base currency, and the last one is the quote currency. And the price you're seeing on this right hand side is the conversion rate of the base to the quote, converting US dollar to Japanese yen. That means $1 is, if you check the current price, you will know the current price of $1 in Japanese yen, like in the live market today. And that is 146.386 yen for $1. So you understand what I'm saying?
Yeah.
Yeah, that just simple division of the quote and the base, just to know what is converting to what. So how do you make money from trading? We make money from trading by buying and selling. To like put it more, I can say I make money from trading from buying at we buy at lows and sell at highs. That's like the basic stuff, but sometimes people do like the opposite. But they can still make money. But the main thing is just we make money from buying and selling. That's the main stuff. So I don't explain pips. Like each move in the market, each candle move in the market, each candle move is calculated in pips. We calculate the moves in the market with pips. I don't have too much knowledge on pips because it was not really important. Like all these things I'm just saying, just basic knowledge. You don't really need it. You just need to know it. So I don't have basic knowledge in pips. I only know how to calculate pips. I don't know how to calculate pips without my trading view tools. Like from here to here, if I want to know how many pips from here to here is, I'll just use my trading view tool. Well, I mean, sorry. From here to here, it's where is this? Okay. From here to here, 28 pips, and the take profit is 147 pips. Which it's not important, but another important thing to know is lot size. Lot size is like I'll explain lot size. Lot size is um let's say you want to reach $10 on a trade. Now for the market to understand what you want to actually risk on a trade, that's when lot size comes in. Like lot size is what the market understands. In the way you communicate to the market your risk. The lot size is with the lot size you calculate your your stop loss, your take profits and the rest. The lot size is just a means of telling the market what you're willing to risk and where and kind of money you're willing to lose or make on the market. So Lots I'll explain more on lot size when you learn how to use meta five. Maybe tomorrow you can learn how to use trading view tools. Like all these tools in trading view, the trend line
Hmm?
to tomorrow we can talk about how to use the tools, all these tools I'm using the trading view stuff, how to use them. Yeah, maybe I'll also teach you how to use meta five, how to basically enter a trade and go out from a trade, close, set limits, stop loss and take profits. So maybe the whole of this week will just be for basic knowledge. No, not really real technical analysis or anything. Okay, we already know that. You already know the people. Do you remember the people that the main people that trade forex trading or everybody involved in forex trading?
No.
Eh?
No.
Why? Am I talking
I
too
don't know,
fast?
Shago. No, no, it's okay. I'm
I said
listening.
the main people that trade forex trading. We have government. The government takes trades. So on behalf
Yes, yes.
on behalf of the government, the central banks that trade. The central bank,
Institutions
yes.
and the
And then hedge funds. Hedge funds are like hedge funds are private sectors, like someone that have so much money, put those money together, then find people that can trade and give them some amount of money to trade and manage for the company. That's hedge funds. Then we have brokers. Brokers brokers are like they are the medium between the main market and retail traders. Like we execute trades, we take trades through brokers. Then the broker will like on behalf of us help us to execute trades in the main market. So
okay.
and there is finally us. We are the last players in the market, so retail traders. We don't really move the market. We don't we just we just follow the trend. Like we just do what we think the main people are doing and make our own money by the side. So we don't move the market. Retail traders.
Okay.
So in trading we have different trading sections. That's if you understand that in forex trading we are trading currency conversion, you understand the need for different sections in the market. We have Asian session. Asian session is starting from probably 1 a.m. or 12 a.m. in the night and it ends around 8. Sometimes they used to move this time, the time for the sessions, trying to move it. But what the one I actually still use is it ends around 8 a.m. It starts around 1 a.m., ends around 8 a.m. because during that time it's when Asian like in Asian countries that during that's their daytime. You understand? So they're the main people in the market.
Okay.
That's why they call that time Asian sessions. That's the time that their banks are open. You understand? It's
Yeah.
it's time it's probably between morning and afternoon. That 1 a.m. to 8 a.m. is probably within their morning to afternoon. So both governments, banks, and their central banks are open. All that stuff that affects the market. So those are people that mainly move the market. During those times, market moves well during Asian session. And from 8 a.m. to 1 p.m. we have London session. That's London session. That's the time. When we talk about London session, we just refer to Great Britain. So that's UK daytime, and market moves very well during
Okay.
London session. Like the most lucrative sessions are the Asian session, London session, and New York session. But we in Nigeria, we mostly like trading London session and New York session because New York session is from 1 p.m. to 1 p.m. to 5 p.m. That during the day in the United States. That's their own session.
Okay.
So I don't trade Asian session. Most people don't trade Asian session because if you don't trade Asian session, you need to be awake like from 1 a.m. Not everybody like that kind of stress. And it's kind of much manipulation during Asian session. So many people like avoiding the market during those times. And they have They have other small sessions like Australian session. Those sessions are just rubbish. I don't know why they have those sessions. But okay,
Mm. Yes.
so let us talk about the basic introduction to charts, like what's charts. Like charts is the representation of market data. The market data, that's charts. Like in school, you probably learned about graphs and other stuff. You know about graphs now.
Yeah.
You know about graphs using candlesticks.
Summer.
That's that just seems like using a graph. Do not use the candle. Use candlesticks to determine intersection between frequency and this. That just the way the
Okay.
chart looks
Okay.
like. The chart is just candlesticks. Those candlesticks now. The How am I going to explain this? You look at this candlestick. This candlestick. This candlestick is still moving. Anywhere this, if a candle is selling, the the down part,
Mm.
the down part of the candle is showing the current place that the price, the conversion price from the currency to one currency to another is currently at. So this candle will keep moving till 10 o'clock. Once 10 o'clock, the candle will close and another candle will open again. That's the same way all these candles started forming. They'll open 1 hour. Now there are different time frames, so it's not only 1 hour time frame. You understand? There are different time frames. You have
Mm.
1 minute time frame, 2 minutes time frame, 3 minutes time frame, 10 minutes time frame, 15 minutes time frame. They have so many time frames. You can see them, right? They have so many time
Yeah.
frames. You still have the ones down here: 1 day time frame, 1 week time frame, 1 month time frame, 3 months time frame. In each time frame, it takes that particular time for market to form one candle. You understand what I'm saying?
Mm.
1 hour time frame takes 1 hour to
Yeah.
form one candle. 2 hours takes 2 hours. 1 day time frame takes 1 day to form one candle. 1 week time frame takes 1 day to form 1 week. 1 week to form one candle. So that's just the basic stuff.
Okay.
So the next, I don't want to talk about demo accounts and live accounts, but let me just explain what demo accounts and live accounts means. So sometimes you want to just like when we are as we are learning, you might decide you want after learning few things, you might decide you want to just check out your skills in the live market. In a market, in the markets. I will not say live market, in the market. So you have you have options. You have options to use demo accounts. Demo accounts are not real, they're not real money. You understand? They're just simulation of real money.
Mm.
Then you can use that test what you've learned, or you fund the real money to take trades. So demo account is just to let you know how the market is, how the market treats you, and other stuff. They also used to learn practice and the rest. For live account is live money. That's just the major difference, but they look the same. It's still same thing. Just that one you can withdraw the money. One you're just trading for fun or just trading to learn. So types of analysis. We have technical analysis, we have fundamental analysis, and we have sentimental analysis. On technical analysis is the one that I do. Most people do it. First of all, for somebody to have a technical no technical analysis, first you have to decide the kind of strategy the person wants to use to look at the market. There are different many strategies. We have strategy, we have SMC strategy, we have ICT strategy, we have support and resistance. Support and resistance like the basic stuff, support and resistance. We have price action trader. Those one they just trade any patterns they see in the market, they take the trade. So there are different type of strategy. You have to just pick only one strategy and trade it probably for the rest of your life for the best, or do whatever you like with it. But I use SMC strategy. I use advanced SMC to trade, and that's my own trading strategy. And for most of these strategies, what you just need is your candlesticks or chart. There's another way. represent these charts that you don't have to use candlesticks. Let me change my candlesticks. I can change it to bars. That's why I told you that it's just like graph. I can change it to bars.
Okay.
I don't know the kind of bars this one is, but I can change it to line charts. I can change it to just, but the best one is candlesticks. So candlestick gives more information than all these other types of chart presentation. Candlestick just gives more information. You can study candlestick easily than most of these other type of, and everybody trading what they're comfortable with looking at, but candlesticks is the best. So fundamental analysis is different from technical analysis in so many ways. For example, so you know that in forex trading we are trading currency conversion. You know that, right?
Mm.
So
Yeah.
most times those countries that have those currency might have policies that affect their currency. Understand what I said?
Mm.
You understand what I said? You understand what I said?
Yes.
For example, Tinubu said he's removing. Okay, let's say Tinubu said he's going to ban exportation. It comes live, like they'll set a particular time and Tinubu will come out and be like, today we are banning exportation of goods from Nigeria and importation. You know that stuff is going to affect naira conversion to other currencies.
Yeah.
Yes, it will affect naira conversion to other currencies. So when that stuff happens, they actually big traders like other governments and hedge funds, all these big companies that trade, they actually they're not actually listening to what Tinubu is saying. Like they're on their phones or laptop or television watching. Immediately you see something that goes against his country's currency, they will start selling it. They will start
Mm.
selling the currency. They will cause the price of dollar or the price of naira to start falling. They will see something that is favorable to the currency. Those people will start buying and to affect. So that one is fundamental analysis. Understand?
Okay. Mm.
Same way I use Tinubu as an example. Trump, that remote trader will be like Trump is affecting the market so much. You will just stay in the market and you see a spike. And those fundamental analysis is very, very fast. You see a spike, it will be a random spike in the market that can cause a lot of losses and other things or give you much profit. So those are people that are very concerned about fundamental analysis, people that trade fundamental analysis. But fundamental analysis is very important. Sometimes fundamental analysis affect technical traders because I want to sell from here, there might be a news, like there is news coming up on, there is
Mm.
news 130, there is news 245 on USD. So that news now, I might want to sell from here and probably market comes, taps into here and start moving in my favor. Maybe during that news, a spike happen and price goes up and takes me out in loss. So I don't trade fundamental analysis. I don't use fundamental analysis, but it has affected me using technical analysis. You understand? Fundamental analysis is very important,
Yeah.
but technical analysis is also very, very important. The only thing I do with fundamental analysis is that I will have to check. I have to check, is there news today? Does any country have news? If any country has news, I'll check if it's serious news that actually affect policies. So that's why I told you to download FX book. FX book or forex.com. They will tell you, you will see on the news, you will see yellow folder, orange folder, and red folder. Yellow folder just means it's just normal policy stuff. It won't affect the market. You understand? It won't affect the
Mm.
market. I mean, like, it will not push the market with force or anything. But orange folder, it might push the market a little. Like when the news starts, this candle now might start shaking until it will just subside.
Mm.
It might start shaking fast until it just subside and start moving normal. Why red folder? Red folder, once it just comes out, this candle will shoot in one direction. It can from here. The candle can from here. Immediately the news just comes out. So the candle already here. That is red folder news. So once I notice, if I, for example, want to take this trade and this trade doesn't trigger, if it doesn't trigger until the news, what I'll just do is avoid trading. I'll just avoid taking that trade because I don't know the direction of the news. I only know the direction of technical analysis. But me, I'm not good in news trading, so I don't take news trade. News trading like gamble. So it's best not to even take the trade at all.
Mm.
The people that use news trading where people that have inside information or stuff like that. That's why most people like to say that Donald Trump is doing inside that trading. Like it's causing flotation in the market, then taking those trades, anything like that. So sentimental analysis when, for example, you don't know anything about fundamental analysis, you don't know anything about technical analysis right now, right? When you
Mm.
just when you just open the market and look at the market and just like feel like market's going to buy, you already know what sentiment is. Then you just take a random trade,
Mm.
buy or sell. That's sentimental analysis. There are people that actually trade like that. They have excess money. So okay, 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 okay. What what we're going to be learning from this. So after finishing the basics, you learn how to use Meta 5, learn how to use trading view tools, like all these tools, we know what they are used for and how to use them. When you learn those ones finish, then we learn how to execute trades in Meta 5. So Meta 5 is the place where we execute trades. Trades we want to take, we execute them on Meta 5. We use trading view for analysis, Meta 5 for execution. Then after that, we'll now go into market structure, liquidity, POIs, and the rest, psychology, live market, and all that things. So the mindset and expectations is you won't get rich overnight. Consistency, patience, and learning is the key, especially patience. Because I used to have problem. I used to still have problem with trading and all that stuff. So the best way I had to tackle those problems is avoiding over trading. For example, in a whole week, I'll take only 4 trades. This trade now this trade is my is if this trade triggers, this trade is going to be my third trade this week. And if I have an extra one trade in any other pair and I'm done for the week. So taking only 4 trades a week, prioritizing quality setup over quantity setup. That's ways of getting better. That should be your mindset. You're willing to learn, to flexible in learning and all that stuff. Learn the key things. This is what I'm just teaching you, just basic things. It's not key stuff, but it's very important. Very important too. So you can explain certain things when you see them. And also risk what you can afford to lose. Very important. Don't risk what you know if you lose. Don't just don't risk what you can afford to lose. That is tough. If you know risking $10 is going to be too much for you. Some brokers have naira accounts, can trade, can risk 5,000 naira. If your stop loss is smaller, you can risk 2,000, 3,000. Just make sure that it's something simple. That once if you lose the money, you won't feel bad. That's the stuff. Um,
Okay.
you've you've downloaded trading view.
Yes.
You've verified your trading view. Like you've signed up.
Not yet.
Why? Okay, okay, just do this. You can do that later.
Yeah.
Then once you go on TradingView, just take your time, watch. You can watch major pairs like USD, look at major pairs, man. There are other major pairs. You can browse major pairs if you want to know about the major pairs and minor pairs. You can see the ones that majors and minor pairs. But this is the pairs I trade. So you can look at one of them, maybe Euro USD or USJPY, and just watch the candle move. Just watch the candle move. Just watch it.
Okay.
Like notice that candle, so candle, if you go to 1 minute time frame now, every candle takes 1 minute. You watch it. Some of them are moving up, some of them are moving down. Just do stuff, and maybe if you have time, you can look at the market. Maybe wake up around 4 o'clock or something and see how fast the market is moving. How fast the market is moving. I mean, I don't want to use the word pips, since I don't explain pips, but I explain pips. I say that pips is the measurement of movement, like measurement of the candle movement in the market.
Yeah, okay.
So you just look at maybe look at past data or current data to see which of the time frame you think that moves best and other stuff. Just basic stuff. So that will be all. Let me don't say too much. I will not remember anyone. So that's going to be all.
Okay.
Maybe tomorrow we'll talk about
Okay.
tomorrow we'll use trading view tools, how to use them,
Okay.
and next tomorrow or same tomorrow we can also look at how to execute trades, put stop loss, put take profit, set limits, buy limits, buy stop, sell limits, sell stop. No difference between all these things. We
Mm,
use demo account and learn that one. That's what we're going to
okay.
do tomorrow. I'm going to save. I recorded the video. I'll save it. I'll upload it on YouTube. I'll send you the link in case you want to watch it again. And that is all.
Okay. Okay. Thank you.
You're welcome.